Welcome to the Salty Investors, episode number 55. It is Thursday, November the 2nd. How are you, Tim?
Yeah, great. Yourself?
Yeah, can't complain. Won't do me any good anyway.
Uh-huh.
So I'm going to lead off with some salt this week. Look, actually, it's not really salt. It's kind of a pre-salt salt for next week. So right now, 33 of 35 economists surveyed by the AFR are now forecasting the RBA will raise rates next week. Of course, so far, the RBA governor's been in complete lockstep with the government in her public speeches. However, as we know, the RBA is trying to put the brakes on the economy to get inflation down, whilst Albo has his foot on the floor, pumping record numbers of people into the country. So this will be a real test to see if she has any lady balls and call the government out. But I have to say that I am not optimistic that she will. What do you think, Tim?
Well, the Fed not lifting, I think she's got a bit of cover. I think that number is, I don't think she's going to lift. I just don't think she's got the balls to do it, but I hope I'm wrong. And hopefully she thinks about the low income earners who inflation's killing them. Hopefully she's thinking of them, but I doubt it. But it'd be nice to get another lift, and then December, that opens that up for a possibility for a lift there as well if we've missed this one. So
yeah, well, I even saw a story today saying that there could be at least 2 more rate rises. I'm like, Jesus, I'm with you. I'm actually very skeptical that she will do anything, because I think she is trying to play. She doesn't want to, she doesn't want to end up Philip Lowe II, and she wants to play nice with the government because she wants to keep that $1 million a year a job for a few years, I'd say.
Well, you don't be the one that starts the recession,
No.
I don't know.
Yeah, that would, even if we did have a per capita, just a GDP recession, 2 negative quarters back to back, it wouldn't be. I mean, we're already in a per capita recession if you look at real wages versus inflation. Chalmers tried to claim the other day that Australians were, I don't know, a certain amount of money better off, but he was doing it before inflation. And the ABC actually fact-checked him and said, yeah, that's misleading. I mean, they do think we're idiots, don't they? They really do. They can just say things like that. I mean, especially telling people that, and even if they don't understand the inflation, they'll be like, what? I'm better off? Bullshit. They're not going to buy that crap.
Oh, yeah.
Anyway,
I think
what do you got for us this week?
There's 2 million Australians who selected to do their personal income tax themselves, but they haven't submitted. The fines are pretty extreme. $313 for each 28 days past the 1st of October, like yesterday. And it goes to a maximum of $1,565. The majority voted for COVID bailouts and more free stuff, but it seems a large percentage aren't keen on paying the bill. I guess they're hoping others will pay, but all this free stuff, we all end up having to pay for it. So get on with it. Pay your taxes. What do you think?
Yeah, well, it's not hard, is it? They give you, July, August, September, 3 months, 4 months? 4 months to get your shit together. It's not hard. And if you've got an accountant, you can just send them a shoebox full of receipts. They will do that for you, if you're that slack, because I personally know some bookkeepers who have to do that stuff. But, yeah.
But yeah, I'm just like, you can't get your accountant. If you're doing your accountant, you got to next year sometime. So you got a fair bit of time, but all these 2 million people have elected for themselves to do my tax. So the deadline's over, and the government needs money. Like, haven't you worked this out? They need your tax dollars. Yeah. So get in and pay it, people.
Yeah. All righty, let's move on. This is going to be pretty much about what I was just talking about before. I just thought this was interesting. This is just a comment on US stock market overvaluation. As you know, I'm laser focused on finding anything that will confirm my bias that it's overvalued. So, I mean, what you're seeing here is basically the outperformance of non-paying dividend stocks, and it's never been this bad compared to, so you can see previous peaks, kind of March 2000 is an obvious one. reached about the same level. I think that's post GFC, that one further up here. Or you have to go back to 82. You remember there's a pretty nasty recession down there. I think the PE on the S&P got to what, 8 or something. I don't know what in the 50s was going on there. But anyway, yeah, I mean, this is just off the charts.
So what happened with the GFC here? How come no dividend payers didn't really, go wild?
I mean, I can't tell if that. It looks like that looks sort of 2009-ish, doesn't it? Which would be the end. Of the GFC. I don't know. So again, this is one of these indicators that like, you've got 3 data points, but as I say, just something to just.
It isn't natural. Like, as you're looking at this isn't normal territory.
No
matter what you say, that's like at least a standard deviation away from the norm. So
unless you want to invoke we live in a different world now, people, tech heavy, growth orientated stocks that don't pay dividends dominate, blah blah blah. You've heard it all before. I mean, there is something to the idea that tech is a far bigger component. You can go back and say, in the Nifty 50 and IBM and Kodak, they were the tech stocks, but I don't think they've dominated to the extent that they do now, right? But we shall see. So this is just Aussie retail trade figures. Now this was pretty strong, 0.9% for September. So up 2% year on year, which is still negative once you take inflation into account, right? But this has put another sort of impetus behind the RBA to raise rates. Retail trade's taken off again, Tim. We're off to the races. We're going to have a summer rally. Christmas is going to be massive. Don't
talk about inflation. Just don't talk about inflation.
Exactly. So this one actually, this is from Macquarie Group. This one on the left here, Australian retail trade volume. What he's done is he's inflation adjusted it, and so he reckons for the quarter. So you can see inflation adjusted, it's been coming down, which is unusual. And he reckons that the September quarter is just, you can see that tiny bit at the end there. It's just sort of basically flat for the quarter of September. And again, on the right, this is from a different source, retail sales per capita. Have a look at durable goods. People are putting off buying a new fridge and a washing machine, a TV, apparently. So, so I mean, it's just, I don't know. The two competing themes here are we done? Are we? Was that it? We've had our. Did I miss? Because I've noticed the retail stocks have bounced about, I don't know, 5 or 10% in the last 10 days. I don't know if you noticed. And we've had, how many false starts with retail have we had this year? I mean, we've had at least 3. So is this the one? Or we just covered a Santa Claus rally? Yeah.
Feels like 70s going into 80s, doesn't it? Like, we've got inflation under control and they're not doing anything to lift the rate, and everyone gets a bit of, hoping it's going to come through. And if inflation sticks where it is, like, these things are going to get hammered a little bit more. But crikey, if they have to lift next year, that is going to be such a disappointment, because everyone will be on a negative start to the new year. They could have front run that a little bit, get them in this year. But
exactly.
Well.
Yeah, we'll see if she's going to spoil.
Drag the pain out
Melbourne Cup
as long as possible.
Yeah. I thought this was an interesting one as well. Just wages, wage price index, which is the green, just hasn't been keeping up. Hasn't been keeping up with inflation and hasn't been keeping up with rents. And I think data just came out yesterday, the day before, that nationally the rental vacancy rate is now below 1%. It's like a new record. I mean, it's, trying to find a place to live, and your wages are going backwards. And there's all these stories about like some 60-year-old guy who's had to go back to rent share, move in with somebody else, like he's 25 again. It's not good news. So, when Chicken Chalmers is coming out with, stuff about how Australians are this much better off, I mean, you just have to shake your head. Yeah, mate. And it just goes to show, like, really, you're going to tell people who know for a fact that they're not better off by what's happening, that just because you're completely insulated. I don't know what Chalmers is on, probably about 300 or 400 grand a year, and all his expenses taken care of. I mean, you don't see it, but pretty much any normal person does.
Well, I've even had high-end people, earn decent money.
Yeah.
Saying, I don't know how my kid's ever going to find a place. And like these people have got money, like, and you think, holy hell, how bad is it for the renters and the, the working class, crikey, it's.
Yeah, well, I've got a cousin he's got a pretty big plot of land, nice house, and he's thinking about building a granny flat up the back for his kids.
Yeah.
Like for his eldest son who's married and got a kid, and for them to move into that on his property. Yeah.
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 Welcome to Australia.
Yeah, welcome to Australia. And now I see articles out about cramming people into these. Oh, we should rethink the size of an apartment. We're going to end up Japanese style. I don't know if you ever seen. I lived in Japan. They have these. They call them. It's a 1K, so it's one room, and the K is a kitchen. That's it. That's all you got. That's all you got. It's literally it's smaller than most Australian lounge rooms. The whole thing.
And they're probably the lucky ones. Like you said, a lot of people share housing. They only got one room, and then they've got to share with, a couple other people. That's not very good for demographics and trying to increase population and have people have families and like it just. Yeah,
there was a story about a young Chinese girl student studying here, and she actually had to pitch a tent in the lounge room of a share house because she didn't actually have a room. She had a tent inside the lounge room. Oh shit! Brilliant.
Nasty. Yeah.
So that's the same chart we saw last week. So a big spike up because of the inflation number, and it's sort of holding. So the market's only sort of saying 50-50 for a rate rise next week. Like the economists are all, they should raise, but I mean, what the economists think and what actually happens is quite often two different things. So we shall see.
Yep.
Okay, so let's get on to another quality. So you've now exhausted all Australian quality stocks, all three of them.
I think there's a couple more. Like I'm going to try and squeeze a few more in.
I know. Yeah. I keep saying that just so that you challenges you to go find some more. So this week we got Cochlear, and this is a cracker.
Yep.
Take it away.
I think most of us know about Cochlear. They develop implantable hearing solutions, and they're based in Australia. They dominate the market with 60% share, and the next two competitors taking up 20% each. About 1 to 2 children in 1,000 have congenital hearing loss, so a natural growth of about 2 to 3% a year. It costs about $50,000 to get the implant, so it's largely limited to the West, with about a 60% market penetration. So they've got most of the market already. Other parts of the world, the TAM will increase as their GDP increases per capita, but who knows how long that's going to take. They currently got over 600,000 implants, and periodically the processor needs to be replaced, and that's on average about every 5 years, and that costs about $10,000. So you got some reoccurring revenue on that 600,000 units as well. Since 1999, it's up 2,650% compared to 230% for the S&P 500. So clearly this is the stuff that I want to get involved with, but it's got a few downfalls. Let's look at the fundamentals. Shares outstanding were diluted in 2019 to 2020 financial year, but they're buying back now. This was because of a patient litigation expense of $420 million.
Ooh.
So they had to. This is the danger of these type of implants, because you're going into the body.
Yeah.
You know, I know you've warned me about the Edward Life Sciences. I love as well, but it's got this sort of risk. If you're putting something into somebody's body, you're open to these large litigation issues.
Yep.
Compared to ResMed, which I don't think has that. So, yeah, take that in consideration. Employee growth is in line with revenue on a PE and a price to free cash flow basis. It's expensive, even on a historical basis. Since 2019, the return on invested capital has been average. Margins are still fairly good. Revenue growth has been great, but EPS has only been okay, aka because of the dilution. They've got a small dividend with a large payout ratio, but they've got heaps of debt, heaps of cash to pay off the debt. So I don't think they go bankrupt. Flip over to the balance sheet and cash flow. We can see they've got a net debt of 350 million, which is very nice. Price to free cash flow. The free cash flow is up 50% in 6 years, and so it's a steady earner. I think that'll continue even in a recession. I think people still want to hear, so I think they'll find the money. It's a slow grower, but the EPS is a bit of a concern. But will it grow out of that with the debt? I don't know. The multiples are crazy, and it's clearly a strong bid from Aussies who are looking for quality and a 100% franking credit. It should be trading at lower levels today due to the lower inequality, but I can't see it happening. It probably needs about a 50% haircut to the multiple, and the only way I can see that happen is with another large product recall. What do you think of the stock?
Oh, I always liked it. Stupidly, there was a product recall in 2011, and the stock got smashed down below $50, I think, and I hummed and hawed and didn't buy it, and I should have. I was trying to figure out what happened, because I haven't been following this closely. What happened because look at all these returns. Like return on equity goes from 40s, now it's in the teens. Return on invested capital again 30s down to mid-teens. Sort of happens. Something happens in 2020.
Well, you've got that litigation thing. Plus,
is that what?
Plus, they did an upgrade of the product cycle as well. So they've got a whole new range of a huge investment cycle they did into upgrading all their products, which they've got to do it periodically.
So what, did they raise capital for that or something, or they? Because
I'm not sure. Yeah. How?
Yeah.
But yeah. Obviously, they've spent down into that, so the returns aren't actually flowing through. I don't think. Doesn't look too much, but
and see what it's looking like when you take that into account, and then the EPS growth numbers and even the revenue growth numbers. I mean, it looks like a mature business, doesn't it now? Sort of, as you say, like it's a great business and it'll tick along steadily, but you're going to pay 53 times earnings like that, 44 cash flow. It just doesn't seem worth it, does it?
Yes. So my new rule is so you get the 10-year growth and you double it to get your multiple. So that's looking like a 20 you need, or a 25.
What are you talking about, the revenue or the
revenue?
EPS? Yeah.
Oh, yes, you really should, but you got to take the EPS if they're diluting. But I assume that cycle's over. I assume they're going to continue to pay down that debt and they'll eat into that, and then they'll go back to the original. So that's miles away from where it needs to be. And just people love it. Like, people have obviously done really well, and the management a bit delusional as well, I think, is a problem. Like, they say their TAM is like the whole world. Like, so, people in Indonesia are going to get cochlear implants at, US cost 50 grand. like, all this stuff that's a bit delusional, I think. And they're saying, oh, I'm going to put it into adults as well. Like, if you're 80 years old, you're not going to go in for major surgery to freaking get an implant. You're just going to wear a hearing aid, and all this sort of stuff.
Unless they can make it very, much less invasive or something like that, and cheaper. I mean, Indonesians might be able to afford it in the year 2075.
Yes.
But
yeah.
Not
But yeah, it
anytime
just gets me a
soon.
bit upset when you see the management talking about these large TAMs. You're like, it
Yeah.
it reeks, you know, Peter Thiel. You know, when you start talking about stuff like that, it reeks that your TAM isn't like that. You know, like that. You wouldn't, you know.
Yeah.
So.
I mean, that's one thing I'd love to ban from just TAM, people talking about TAM, you know. Just, they just abuse that term so much.
So they
Yeah.
will be coming out of the cycle. I think return on equity and return on invested capital will come back a little bit stronger once they
Yeah.
get this debt underway, and you know the buybacks are happening now. Like they'll eat into that a bit more, but
Yeah.
it didn't seem to knock down. Like the share price didn't fall in the 2019-20. You know, when they had to issue all that
No,
debt.
it's what I
So
mean. If you think about the last couple of weeks, I mean, this looks way more expensive than CSL or ResMed, doesn't it?
yep.
Just on those basic
Mm-hmm.
metrics. Just and I suppose it hasn't had any of the major problems. Well, I mean, ResMed's got this, you know, are they going to be decimated by obesity drugs thing? CSL's kind of, can they digest this massive acquisition and get returns out of it? But these guys, what I suppose they had that $420 million payment, which is not that big to these guys, really. I mean, they got a pretty big balance sheet. So, yeah, it's interesting, isn't it, how that's just sort of remained elevated. It you know, I would even go as far as to say, Jesus, I mean, is it a short even? You know, be dangerous short, but
yeah. I think they got strong holders, like because
yeah,
I can go back all my investing life cycle, and this has been a stock to buy. You know,
yeah,
like there hasn't been a. I'm sure most doctors, most high net worth individuals have got some of this, you know,
yeah.
in their portfolio. It's just, and then when you look at the returns, you're like, well, why would you ever sell it? You know, it's just like
Yeah.
you know, I'm up 2,600% or whatever. What am I going to start selling it now? You know, like buy
Well,
what? Like,
yeah. That's I'd sell some of this if I own a big chunk of this. I'd sell some of this and buy some ResMed on a punt that ResMed's going to be all right. That's what I'd be doing.
yep. So
yeah,
I just can't see how it's going to drop, but I could be wrong. You got to keep it in your radar, and you know, I think it's got, you know, it's got another 20, 30, 40 years in it. You know, you can do your DCF out a fair way on this thing, but the numbers are low. Like, look at that EPS number. I think that's gonna, even the 3-year one is pretty, you know, it's all pretty nasty. So
yeah. All right, there you have it, folks. Another quality Aussie stock. This one looks a bit overvalued, but if you've got a reason why it isn't, we'd love to hear from you. Put it in the comments, and we will see you next time.